Hi friends, welcome back to our channel. In business trust, there are three parties. One is investor, second is business trust. It may be real estate investment trust or infrastructure investment trust, and the SPV. SPV is an Indian company in which business trusts have 50% of share or more. Investors invest their money in business trust, and in return they will get the unit of the trust, and the business trust invests this money in the SPV. In return they will get the shares of it. If SPV paid the tax under the normal rate, that is 25% or 30%, depends upon the turnover in the previous year, and distributed dividend to the business trust, then it is exempted under section 1023 FC. When business trust redistributing this income to the investor, the same is exempted in the hands of the investor as well under section 1023 FD. If SPV paid tax under reduced rate, that is section 115 BBA, and it distributed dividend to the business trust, then again it is exempted under section 1023 FC in the hands of the business trust. But when business trust redistributing this income to the investors, it is taxable in the hands of the investor. If the investor is NR or FC, then 10% applicable, others normal tax rate. Since it is taxable in the hands of the investors, while making the payment, business trust have to deduct TDS at the rate of 10% for all payees under section 194 LBA. If the SPV paid tax under normal rate, then it is exempted in both the hands of business trust and investors. If SPV paid tax under reduced rate, then it is exempted for business trust and taxable for investor. Next is the interest income paid by SPV to the business trust for the debenture subscribed or loan provided. Again, it is exempted for business trust and taxable in the hands of the investor. If the investor is NR or FC, then 5% is applicable, for others normal rate. Since it is taxable, while making the payment, business trust have to deduct TDS at the rate of 5% for NR or FC, and for others 10% under section 194 LBA. So far we have discussed the three income received from SPV to business trust and business trust to investor. Apart from the SPV, the real estate investment trust may receive rental income from the real estate asset owned by it. So the rental income received from real estate asset to the business trust, again it is exempted under section 1023 FCA to the business trust, and it is taxable in the hands of the investor. The rental income is taxable at a normal tax rate for all assessees. Since it is taxable, when the business trust distributing the rental income, it has to deduct TDS under section 194 LBA. If the person NR or FC, then rate in force is applicable, for others 10%. For all other income earned by the business trust, it is taxable in the hands of the business trust and exempted in the hands of the investors, such as long-term capital gain under section 112 at 20%, short-term capital gain under section 111 at 15%, and all other income at a MMR, that is 42.74%. It is taxable in the hands of the business trust and exempted in the hands of the investor under section 1023 FD. Let's summarize what we have discussed so far. So, the income received from SPV, the dividend income received from SPV, and SPV paid tax under normal rate, then it is exempted in the hands of business trust and investors. Second one, dividend income received from SPV and SPV paid tax under reduced rate, then it is exempted in the hands of the business trust and taxable in the hands of the investor. Interest income received from SPV, it is exempted for business trust and taxable for investor. Then the rental income received by the business trust is exempted and taxable in the hands of the investor. And all other income received by the business trust is taxable for business trust and exempted for investors. If the owner of the unit of business trust wish to transfer it, then capital gain may arise. If the period of holding is more than 36 months and STT paid, then Long-term capital gain at the rate of 20% in excess of 1 lakh is applicable under section 112A, and if it is less than 36 months, then 15% under section 111A would be applicable. If any person wish to transfer the shares in SPV and in return he is getting the unit of business trust, then it is not considered as a transfer and capital gain will not apply. But ultimately, when he is transferring the unit of the business trust, then the cost of acquisition will be considered as the cost of acquisition of the shares in SPV plus period of holding will be considered as the period of holding of shares in SPV plus period of holding in units of business trust. The last 2 point is business trust need to redistribute its income to investors in the same proportion as it received from SPV or from rental asset or generator in any other source, and it has to file the return mandatorily. So that's it guys. So wish you all the best.